Hi everyone. Today let's talk about what Bank of America sees for 2024. Then we'll look at the calendars. Then we'll look at the charts, as well as my results for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Bank of America sees 3 trades for 2024, and really they're looking basically outside the United States. They don't see a ton of opportunity here. And really what they're looking at is emerging markets currently issued in US dollars. Emerging markets have been lagging the greater economy. And if we do see a solid economy going into 24, then we could see these laggards like emerging markets start to rally. And we have been seeing that at least a little bit. And they mention here, Bank of America is forecasting a 12% move on this trade with a pretty low volatility of 5.6%, which could give you a pretty solid move. These also have a pretty solid yield, which you don't want to underestimate, which overall has delivered an 8% return since 1992. Pretty solid there, and you can invest in that in the Vanguard Emerging Market ETF, which does have a pretty low expense ratio relative to some others. And then leveraged loans, not sure I fully believe into this one. Bonds have rallied pretty extensively. We could see yields start to go a little bit higher. I think that move is probably a little bit overdone, but definitely something to pay attention to. Fixed income has been solid over the last month or so. And then they mentioned here Spider Blackstone Senior Loan ETF. Pretty high expense ratio of 0.7, but that gives you the opportunity to participate in that trade. And then looking at Idea 3, they're looking at India. This one I absolutely believe in. I think India is going to supplant China in their economic power. India is much more friendly to the world and less likely to try to dominate everyone. People have been divesting from China. Their economy looks quite weak, and India seems to be the place that people are going. And for that opportunity, you have the Wisdom Tree India ETF, which does also have a pretty high expense ratio, but it's returned 8% this year and 25% over the past 3 years. This does seem like a good opportunity in my opinion. Moving over to the Fear and Greed Index, you can see we are still in extreme greed. 1 week ago, we were at an 80. And we're now at a 77, so we continue to close the weeks in extreme greed. Yesterday was greed, but then we pushed back into extreme greed, and all the major indicators here are in extreme greed. Market momentum, stock price strength, breadth also in extreme greed, put call ratio still saying extreme greed. And then volatility and safe haven demand are kind of the outliers. They haven't been super relevant here recently, but they're neutral and in fear. And then looking at the AAII Sentiment survey, you can see we are at a 1-year high. This is the highest it's been in the last 12 months at 52.9. That's where we are this week. That's up from 51.3 last week. Super, super high numbers. Bears have pretty much evacuated, well below historical averages. Even the middle is starting to get squeezed by just how many bulls there are. Super, super bullish. And as a contrarian metric, I don't typically like to go along with the herd, but markets continue to go higher, just something worth paying attention to. This has a lot of room to swing. We're definitely on the bullish side of the pendulum, and then once it swings back towards bearish, markets will probably fall pretty significantly at some point in the next quarter. In terms of seasonality, we are in the Santa Claus rally, which is the last 5 trading days of the year. So we have 26, 27, 28, 29, and then you have the first 2 trading days of January expected to be bullish as well, and you can see that expected move of about 1 to 1.5%. So looking at the economic calendar, you can see Monday is obviously Christmas, so no markets on Monday, and then looking at Tuesday, 2-year note auction, that'll be interesting. Wednesday, pretty light 5-year note auction. Looking at Thursday, we still have initial jobless claims. Those continue to be interesting, as well as pending home sales expected to be 0.5%. The housing market continues to be strong, so that's something worth watching. And then on Friday, there's basically nothing important, just Chicago PMI, not super impactful for markets. Moving over to Max Pain, you can see it's down at 469. Really hasn't moved much from this week. Total options, 1.8 million to start the week. That's really high. And then looking at this put call ratio, this is way lower than we've been seeing, down at 1.44. We've been seeing readings in the 2 range, all the way up to the 3 range a little bit over the past few weeks. Now we're down into the 1.5 range. Definitely interesting. Call wall at 475 and 480. Way higher than any of the puts. Definitely interesting to see. Let's go ahead and zoom out, see what that looks like. Still a lot of puts way out of the market, but at the money you can see there are a ton of calls, which to me means markets are expected to go lower over the next week or 2, which is interesting relative to seasonality. Moving over to the charts, starting off with the S&Ps here on the weekly chart. We got another up week, 0.75%. Still looking at trend resistance up around 48.36. which would be right at all-time highs. You can see that level here. If we touch that trend, that could be interesting. We did overthrow it here a little bit in July, but then that was an area of rejection. You can see that level marked multiple tops over the past few months. That was the high here in November of 22, as well as January of 23. Marked a little wick low here in August of 22, so very interesting level right in that 48.36 area. In terms of metrics, you can see momentum still bullish, RSI still bullish. We did break this downtrend line, so we have higher RSI, but it's still not as high as the peak that we saw on 24 July, despite the much higher prices that we're seeing currently. If we get another candle to the upside, we'll probably see overbought conditions on the weekly chart, currently sitting at a 68.29. One more candle higher should put us into that 70 range. So still bullish, everything still looks clean to the upside, but getting into some areas of pretty strong resistance in my opinion. Moving over to the daily chart, you can see we're still in this consolidation. We did get another candle higher on Friday, but we had that really strong down candle on Wednesday, which was interesting. After touching that 474.78 level, overthrew it just a little bit, and then pushed all the way down to this kind of mid-range here at 468.50. So interesting, obviously very strong rally. Obviously a higher high from this July high, but zooming in here, let's go ahead and look at what I was talking about and see that candle up right to the level, overthrew it just a little bit, pulled back, kind of established this level, didn't get all the way down to my 67 level, did touch these wick lows from Friday. So right now this is consolidation for me, kind of grinding higher. Need to see it break above 474.78 if I'm looking to trade this a little bit more bullishly, and it does seem like we might get that based on the weekly chart. Moving over to the NASDAQ on the weekly chart, same thesis, broke out above this short-term trend, next trend line up around 76.225. That would be a new all-time high. We are right at those wick highs from the 22 November of 21 week, and you can see we closed right there. We did overthrow it a little bit, so you did get a technical new high on the NASDAQ. Bullish momentum, bullish RSI, right at that downtrend line. You can see we marked that from these previous wicks. RSI touching that level here now. It's already overbought on the weekly chart, which is also interesting. Doesn't mean that it can't go higher at least a little bit. You can see we obviously overthrew overbought conditions here from June into July. Could absolutely get into this upper range, but it's been a big move. Eventually it will pull back. You can see we had a very, very strong rally here from the lows in March all the way to the high in July. And then eventually we did get a couple of stair steps lower from around 15,780 all the way down to 14,000 or so. Moving over to the daily chart on the NASDAQ, same thesis as the SPY. We're in this consolidation. We have not made a new high since the Wednesday high. We wicked that level at 410.46. That was that new all-time high that we talked about. Tried to get close to that level, ended up selling off a little bit down to 408.38. So we gapped higher, moved lower, could not get above 480.81. Momentum continues to fade. RSI still looks a little bit weak. So basically the same as the SPY. Weekly chart still looks strong. Daily chart showing consolidation. Moving over to the Russell on the weekly chart, this has been a very strong move. Continues to go higher. Another strong week at 2.25%. Cannot seem to get above that 201.88 level. We touched it this week, pulled back from it slightly. We'll take a look at that on the daily chart, but otherwise momentum still very strong. Volume continues to be very strong over the last 2 weeks. Seems like people are moving into these small caps. They have been the laggard over the last year. And it does seem like the only area of opportunity right now, as big tech continues to be quite high on the PE ratios and forward PE ratios. And then looking at the daily chart, like I talked about, you can see very similar consolidation. Does look a little bit stronger. We had 6 days in a row of consolidation. Then we gapped higher, touched that level once again. We did touch it on that first wick high from Wednesday. You can see very strong selling from that level. Seems like a lot of people were watching that level. And then we gapped into it, tested it again, pulled back from it. Can't seem to get above it. If we do get above it, that would be an opportunity. That would be a clean breakout. Then we could be looking for higher prices, and that would put us into this previous consolidation. Your price target for that move would be up around 208, and then the wick high from that consolidation was up at 212. So that would give you quite a bit of room to the upside of that consolidation if it breaks this wick high going back to August of 22. Moving over to the Russell and the Dow. Moving over to the Dow on the weekly chart, just about the same thesis as everything else. Gapped higher, dojied, touched that level that we added here at 376.35. That is a new all-time high for the Dow. Still bullish momentum, Almost hit overbought conditions last week at 69.21, went up a little higher, 69.72, so technically not overbought quite yet. Definitely very extended to the upside though. Looking at that on the daily chart, you can see that same consolidation that we've been talking about. On the other charts, you got 6 days in a row. Doji can't seem to make a new high. Does seem like markets are weakening at least a little bit. This has been super strong. You can see we've been riding above the 9 EMA, which is not super common on the daily chart. Finally tested it here on that bigger move down on Wednesday. And you'll notice the volume ramped up into this consolidation, and then it's been flat here. If it breaks out, that would be interesting. If this 9 EMA breaks, you're looking down at 365. If the 21 breaks, then you're looking all the way back down to these consolidations, going back to September of 23, down around that 350 range. Moving over to the equal weighted S&Ps, you can see we are in this area between 155.79 and 160.31. That goes back to this consolidation below that kind of wick high that we had in December of 21. So 160.30 is your upper level. We did get a slight bullish candle, up about 0.33%. Momentum still bullish. RSI still bullish, not overbought yet. Volume continues to look okay, so still strong, still looks good on the daily chart. On the weekly chart, stepping down to the daily chart, you can see there was a little bit of weakness from this previous wick. The relative high was Thursday. A couple days of downward movement, tested that 9 EMA, did bounce slightly. Want to see it take out that previous high, push to that 160 level if it's going to do it. Otherwise, this is currently a lower high, and if it breaks down from 155.79, looking at that 21 EMA down at 151.92. Moving over to the ratios, SPY Russell and NASDAQ SPY. Russell continues its outperformance. Got the 55 EMA down at 232 on this ratio. This has been a massive sell-off. You can see we were all the way up at 259, pushing all the way down to 234. 231 is the target at that 55 EMA area. This could be the start of a head and shoulders where you have a left shoulder, head, right shoulder potentially. But right now, everything looks like the Russell is going to continue to outperform. You can see momentum, super bearish, RSI, super bearish, crossing below the 50 line. Everything looks weak here for the ratio. And then looking at NASDAQ SPY, NASDAQ continues to outperform just slightly. Very slow grinding uptrend on this ratio. You can see this is at a critical level. You can see the highs here from November of 21, same highs here in February of 21. Right in that same range once again. And every time we get into this range, we do start to see SPY outperformance, at least over the medium term like we had here, or even over a longer term down move from that November high all the way to the December of 23 lows, all the way to the January of 23 lows. Moving over to SPY divided by the M2 money supply on the weekly chart, it does kind of seem like this is forming a rising wedge here now, which is interesting. You had this high going back to July, the high marked in August. Now we're pushing up to that trend line, up around 23-24, which still would give you a pretty decent amount of upside. You can see we have the pre-COVID high, the all-time high. Now we are making a higher level on this ratio. Talked about it many times. Anytime you get above this 2205 level, that is typically not a level that we can stay above for very long. But we've been above it here for a couple of weeks, which is interesting. The only time that we've seen this before was going back to the dot-com bubble. And obviously we saw a massive move lower from those levels. So we're here pushing higher. Everything still looks bullish. Momentum bullish. RSI pushing towards overbought conditions once again. Currently in divergence. So the RSI high was July. We have higher prices here, lower RSI, so definitely still divergence on this ratio. You can see that here. But realistically, I'd be looking for a touch of that upper trend line around 23-26. If we overthrow it, that could be interesting, rally up and then break down, but looking at this as a rising wedge, and I would expect it to break down eventually. Moving over to Apple and Tesla. Apple had a down week, 2% down, after wicking this all-time high last week. Technically made a new high on that wick high. Then we gapped down, tried to recover a little bit, and then fell. So weekly chart stepping down in momentum, not great. RSI moving lower. We're pretty extended from that 9-week moving average, down at 187.76. Does seem like we could get down into that range. In terms of levels, I would be watching 186.81, so just a little bit below that 9 EMA. It is interesting to see that 21 continues to remain flat even with prices higher. So you could argue this is going to pull back to that 21 down at 182.37. Either way, that gives Apple quite a bit of downside. And if Apple is underperforming markets, that's usually not great. You want the biggest companies in the world to continue higher along with markets, but we are not really seeing that right now. We're seeing small caps outperform. And then looking at Tesla, you can see we did break this consolidation 2 weeks ago, and then we had a slight down week. Doji touched that 255 level. not really giving any kind of clear structure. We were in this expanding down wedge, consolidated at the high, broke out. So technically a breakout. You could argue this is a retest. If it breaks back above 255.44, that could be quite bullish. Let's go ahead and zoom in on that so you can get a little bit better picture. Downtrend, rally, consolidation at that high. Breakout, so technical breakout, like I said, bullish momentum, bullish RSI. Even with the down week, it still looks okay. Once it breaks 255.44, that could be a level to trade off of, and that would be your stop loss as we look for a rally up to these previous highs around 280. Moving over to Nike and FedEx on the 4-hour charts, I just wanted to highlight the big down moves these had on earnings and forward guidance. We are starting to see some of these stocks crack on their next earnings announcement. Definitely something to pay attention to as we move into the next earnings season. Massive down candles, 11.6% on Nike, and then 9.74% on FedEx, and then it continued down a little bit further. Either way, both of these look very weak, and I do think these are potential omens for the next earnings season. Moving over to Broadcom and Alphabet, we did get a really strong push 2 weeks ago on Broadcom, almost 20%, and then this week we got a slight down move, 0.69%, marked that new all-time high at 1150. Let's go ahead and look at the shorter time frames here. You can see we did start to show a little bit of weakness, still above the 9 EMA, but momentum fading on Broadcom. And then looking at Google, really strong week, 6.63% coming off of that 21, the 9 and VWAP, really strong support level at 133.86, pushed right up to that next trend line as you would expect. If it overthrows it, you can see I have 143.82 as horizontal resistance right at these previous wick highs from October. And if it pushes above that level, looking at 150.26 on Alphabet, momentum ticking towards bullish, RSI ticking towards bullish. Does seem like Alphabet has a little bit more room to run next week. Moving over to staples and discretionaries, staples continues to be basically flat, 0.031 to the downside on the week. Momentum still bullish, still holding above 70.85. Next level would be 72.50, and then you got that overthrow range at the EMAs right around 72.83. So looking for a move into that zone, still seems like it could happen. RSI is holding above the 50 line, especially with what we saw on discretionaries. Technically, discretionaries was still positive, 0.15%, but if you look on the shorter time frames, you can see this does look quite a bit weaker. Rallied up, made that level, pulled back, made a new level. Now we're kind of in this consolidation. Whereas if you look at discretionaries on the daily chart, you can see we rallied up, tested that 200, found support, and then we had a strong candle on Friday, whereas we had a weaker candle on discretionary, starting to show a little bit of rotation in my opinion. Moving over to oil and gas and energy on the weekly charts. Both of these broke out here. You can see these downtrend lines, gapped through it, had a positive week on oil and gas. Similarly on energy, it was a doji, but still positive 0.81. I do think there's opportunity here as this starts to roll towards bullish momentum. RSI needs to get above the 50 line on both of these, but I do think that's going to happen, and I think there's some opportunity to push energy back up to these previous highs around 92.80, at least to this midline at 87. Similarly on oil and gas, you have this previous high. Let's go ahead and add a level there. That was a pretty clear pivot point. We'll go there at 154.13, midpoint 145.92. I would expect at least a push to the 21, sitting at 144.13. So looking for a couple of point move here to the midpoint. Couple of more points if it overthrows to these previous highs. Energy and oil and gas looking decent into next week. Moving over to transports and industrials. We've been talking about these for a while. They've been on massive runs. Industrials making a new all-time high. Let's go ahead and add a level at that wick high from 2 weeks ago, right at 113.44. Touched that level once again. Pulled back from it slightly. Still a positive week. Also, transports showing some weakness at this previous high. Does seem like a giant double top is forming. Obviously, if it breaks out, there could be some room. Let's go ahead and expand that out so we can add some levels here. There, so now I got one here at 170.90. That is this pivot point here from 7 Feb. And then I added one here at these wick highs going back to 276.50. Let's go ahead and put one at the all-time high, which is at 282.40. That's the wick high here from May of 21. So a couple of levels above if we do break out. Momentum still very strong. Volume has been really light on this rally, which is interesting, but it continues to go higher. Slight down week, not very much, 0.12%. Want to see it break out if it's going to do it. And then looking at industrials, like I said, massive week 2 weeks ago, slightly bullish here at that new all-time high. Waiting to see what happens now. Moving over to 20 and 50-day breadth, continue to see this slow downtrend, touch the 9 EMA here. Momentum fading, RSI looks okay still, but 20-day average showing weakness, and then looking at the 50-day average, this continues to be very interesting to me. We are at those wick highs that we typically see. Haven't touched 92.25 quite yet, but every time we get above 83.83, that is typically the range where we start to see weakness. Happens just about every time. We overthrew 92.25 here in June of 20, but you can see we did get a step down on momentum on a closing basis. So that typically means this is just about done. You got 1, maybe 2 more weeks in this range before we start to see at least somewhat of a pullback back into the more normalized ranges around that 40 to 52 area. And then looking at the 200-day average here just for a moment, you can see we're at these previous highs from February as well as July. Definitely an interesting level. Wicked 76.04 once again, very important level. You can see that's the high here in November as well as the high almost in January of 22. So important level, absolutely could get above it. We've been above it a few times. This is the pre-COVID high. This is the all-time high. We don't typically see levels up in this range very often. You can see the last time we saw it was all the way back here in May of 2013, so very, very long time ago. So this range, don't get there very often. We are right at the cusp of it. Absolutely could get in here for a little bit, but that's usually the area where we see bigger pullbacks, just like we saw on this previous all-time high on the S&P 500. Did take a long time to materialize, though. You can see lots and lots of candles before we eventually pulled back very, very strongly, all the way down to this 11 area, which was that June 22 low, as well as the October low. And then we saw a very, very powerful run out of that area. Absolutely could go higher, but just understand this is an area of some pretty decent resistance. Moving over to yields just for a moment. 2-year selling off lower on the week. I think the 2-year auction this week will be interesting to see if it holds right in this previous range between 4.25 and 4 1/3. And then you got the 10-year sitting at 3.9, so still very inverted, which is interesting. Momentum on the 10-year does seem to be showing a little bit of strength. RSI did hit oversold conditions, starting to show a little bit of move, whereas the 2-year continues to sell off. Once we see that flip back towards normalized conditions, that's typically not great for markets after we've been inverted, so keeping an eye on that. Yields not looking strong yet, but does seem like it's headed back towards normalized conditions. Moving over to the dollar on the hourly chart, you can see we did have that pin low on the Friday session. You can see that here on the daily charts. Let's go ahead and expand that out to give some relative price action. Big rally, big sell-off. We're at these previous lows here going back to July of 23. Definitely interesting. 101.25 is an interesting area as well. Still bearish momentum. RSI showing a little bit of life. And then looking at that weekly chart, you can see still another very bearish week. Momentum still carrying lower. RSI still could go lower for sure. Not quite all the way to these lows here from May at that 101.25 level. I would expect to at least get there on this down move. So still showing weakness on the dollar. Once we get here, then we'll have to see what happens at that pretty interesting level. Moving over to bonds, we did see a down day on Friday. TLT actually showing 2 down days in a row. Momentum starting to roll over, RSI starting to roll over. That's a little bit more interesting. Got the 21 EMA sitting down at 95.28 there. Still, if it gets below the 200, that could be interesting. This would be a rally up consolidation breakdown. That could be a little bit more weak for bonds. And that does kind of correlate with what we saw on the 10-year, showing a little bit of bullishness for the longer dated government bonds. And then J&K still holding above 94.82, technically below it by 1 cent, but really right on top of it. Does look like a consolidation and kind of a double top here on the daily charts. So looking for yields to go a little bit higher next week. Moving over to the VIX here on the daily chart, you can see we did see a really strong spike on Wednesday. Makes sense. Another spike on Thursday. Interesting. Pretty big down move on Friday, but we're still holding well above the 9 EMA and 21 EMA. So technically this is a slight bull trend here on the daily chart on the daily time frame. And then looking at the week, you can see we wicked that 9-week moving average. Momentum ticked towards bullish. Interesting. That's the first step we've seen going all the way back here to September, which ended up being a pretty significant up move. Doesn't mean that that's going to happen right away, but definitely interesting to see a little bit of strength on the VIX, indicating some volatility might be to come here on the SPY. Moving over to my accounts, I did not do amazing on the week. I got whipsawed a little bit in that consolidation. I was kind of trading more of a trend-based strategy, and then we ended up getting a consolidation for the week with a slight bullish move. IWM still doing fine with that position. And then looking at the Qs, I still have a covered call, pretty long dated, out here to 55 days on 2 calls. Again, I do think that there's some weakness to come. However, you can see I am technically still bullish with a 54 delta because I do have those shares and I do have those short dated puts at 408. For $1.73, I wouldn't be opposed to rolling those out and down a little bit on the Monday, depending on what we see. Wouldn't surprise me if we did get another slightly bullish week before we see weakness in the middle of January. So looking for a bullish Santa Claus rally and then an eventual sell-off into the mid to end of January, which is why I have these longer dated calls. And even this call here on the IWM is pretty protective, down at 187, very, very deep in the money on those positions. So slightly bullish going into Monday, but really looking at consolidation in my opinion. In terms of the graph for my Qs position, you can see if we stay right where we are, I make quite a bit of money. If we continue to rally, I will eventually lose money because I do have those long dated calls. But as long as we rally just a little bit, I'll still be fine. And then as long as we stay above this 390 area, that's where I would start to lose money on an expiration basis. Obviously, you have to be pretty patient for these graphs to come to fruition, but that is what I'm looking at right now. Let me know down in the comments section what you think of Bank of America's trades for 2024. Which one's your favorite? Which one do you think is not going to work? Definitely let me know. And if you got any value out of this video, make sure you like and subscribe. It is free to you and I appreciate it. It does help with the YouTube algorithms. Otherwise, of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a Merry Christmas.